that before. Thank you. All right. Good morning, everybody. Good morning. Welcome to Miami. Welcome. Thank you all very much for being here today. There's a lot of fun stuff going on if you haven't already been a purview to it out in the hallways. We've got tons of great exhibitors and sponsors who have contributed to make this event happen, and also have some great tables out there with product and to share a little bit more about what they are doing. Also downstairs, we're hosting a brunch as well, and we'll be having lunch here very soon. But before we get started, I do want to go ahead and welcome up my guest of the day. Ladies and gentlemen, if we can, please welcome Senator Cynthia Lummis.
Join you.
Hi, Senator. How you doing?
I'm doing well. How are you, Kyle?
Wonderful, wonderful. We've got a packed house here today in Miami. There's hundreds of people sitting here looking at both of us, ready to hear about everything that's happening in the industry. How are you?
Doing well. The Senate is in session today, which is why I can't be with you in person. But I'm looking forward to learning more about your program, what you're doing in Miami. Miami's such a dynamic city in innovating in this space. So you picked a perfect venue. The mayor is an outstanding advocate for the Web3 development, and the future's bright where you are.
Thank you. I would agree. The sun is out, the weather is warm, it is definitely bright. With that, Senator, I would like to get to my first question to talk a little bit about some of the work that you've been doing. The recent events of the last 2 years, and more importantly, almost the last 3 months or so, a lot has happened in the Web3 industry, but a lot has happened in technology. Where do we currently stand as an industry as it comes to regulation and policy and some of the work you're doing in DC?
It's taken a long time just to educate and inform other senators and members of the House here in Washington about what's going on in this industry, how to appropriately regulate it, and find the right balance between making sure that we're fostering innovation, creating an environment where innovation can flourish, but at the same time having an understood regulatory framework that will allow for consumer protection. So that's been the challenge up till now. That has escalated with some of the events of the last weeks, where members of the Senate are now beginning to understand that we need to legislate. We can't keep this on the back burner much longer. So I think that the willingness to really consider the legislation, especially that Senator Kirsten Gillibrand and I are sponsoring, is becoming more important in terms of creating that regulatory environment that can assure some consumer protection.
So speaking of that, I want to talk about the Financial Innovation Act here in just a moment, but to what you just said, are we headed in the right direction when it comes to policy for digital assets here in the United States? Where do we stand after the last month or so in terms of its direction? Are we making strides, things being reevaluated, or are we completely at a hold and standpoint? Where do you see us at right now?
Well, I think we're evaluating what has happened and applying it to the draft legislation that the Congress is considering and has before us. So we're asking ourselves questions. Would this draft legislation have been able to prevent some of the turmoil that has been experienced? Would it have protected consumers? If not, how can we tweak it so it can? There may be some legislation moving even before Christmas, specifically on a component of this, meaning we'll take the part that's non-crypto related and move it forward while we continue to evaluate crypto regulations, our definitions are going to be important. Since we have certain digital assets that have literally moved from proof of work to proof of stake, have they now become securities? How do our definitions dovetail with that? So the innovation that's occurring is occurring in an unregulated environment, which allows us to assess the legislation that has already been prepared against the environment. So in a way, it's good that the innovation has been occurring unimpeded by regulation and unregulated, even though consumers have been hurt in the process. It's been a kind of a buyer beware atmosphere out there. And now I think that there's more urgency to move ahead with regulation that's still appropriate, that will still allow that innovation to occur in the United States, but in a way that protects consumers.
Agreed. And if you could, maybe a brief overview as the Responsible Financial Innovation Act that you and your colleagues have been working on tirelessly. I've been watching it as it's come together over the last few years, and more importantly, as it started to make its way through the appropriate parties in the last few months. But for those who may not be aware, can you provide us an overview of what this bill is, why this is important, and more importantly, why now?
Well, Kyle, Senator Kirsten Gillibrand of New York and I are sponsoring the Responsible Financial Innovation Act, which essentially takes the digital asset world and lays it and conforms it in ways to our existing regulatory framework for traditional assets. So you would have commodities like Bitcoin is clearly a commodity, would be regulated by the Commodity Futures Trading Commission. And other assets that look more like securities would be subject to the Securities Exchange Commission's consumer protection and disclosure requirements. We're also looking at stablecoins, which is the part that might move this year, and trying to dovetail what it would look like for a non-bank issued stablecoin in terms of regulation versus a bank issued stablecoin, accommodating both, but making sure that if you're going with an algorithmic stablecoin, it is 100% hard asset backed. And we also want to make sure that's true of bank issued stablecoins. As stablecoins become the manner in which retail customers interface with banks and the movement of US dollars digitally, it's important that we handle this correctly. With regard to a US CDBC, we're taking a wait and see approach. People like me believe that if we're going to do a CBDC, it needs to be wholesale only, meaning between the banks and the central bank, but not direct to the customers. We've seen what has happened with the Chinese CDBC and its ability to use it as a means of surveillance. We want to protect privacy. We also want to make sure that cybersecurity issues are appropriately addressed. For example, there were allegations that were in FTX that there was a hacking and then that some of the money disappeared via hack. Whether that's true or not, we want to make sure that there are adequate cybersecurity regulations to address concerns that people have that cryptocurrencies are subject to hacking in ways that make them an insecure investment. So lots of moving parts in this bill. I think it will move in different pieces. It's currently in the Senate Finance Committee in one piece because Senator Gillibrand and I wanted people to see what it looks like when it's all encompassing and in one piece and put together. But we can break up the pieces and send them to different committees. For example, stablecoin can go to banking. The tax components can stay in finance. The Bitcoin component, the commodities component can go to the Ag Committee, where commodities are jurisdictionally placed. So that will come next, and that will come starting in January. Up until then, we're trying to use the time we have to tweak the definitions, work with the SEC on what they have identified as possible unintended consequences of our current definitions, and get things ready for a serious legislative launch and effort in 2023.
So speaking of 2023, we're kind of in the middle of this phase change between the last 2.5 years of the industry's growth to the next 2.5 or 3 years as well. And a lot of the work you do, while it takes place in DC, you are all over the country. You're in many events like this today. You're talking to founders, to leaders, and the like. But how can this industry and regulators work together? How can we sit in a room together to talk about the things right, wrong, together, or broken, to push some of this policy forward? As I know you and I have mutual friends and discussions as well about all that we all want to do, all that we all want to see. But how do we all sit at a table? How do we all get in that conversation together?
Well, Senator Gillibrand and I continue to travel around the country to try to attend events such as you're having today, to learn more about the state of technology. I've had opportunities when I go to events such as you're hosting today to then pull people aside who've been on different panels and made different presentations, the innovators, the people that are thinking 10 steps ahead of where my head is at, and have them help me help me understand where this is going, and make sure that we're not inadvertently impeding what they're trying to accomplish and what they can do to innovate. Of course, we all want to see the advances that this tremendous technology has made available to us, and make it available to large numbers of people. Especially in my case, I want to see it be available to the underbanked and the unbanked, because those are the people who really need faster, cheaper, safer ways to transmit money. It empowers them, it enables them to be able to access parts of our economy that they have felt they didn't have access to. Bank swipe fees, credit card swipe fees, are higher in the US than anywhere in the world. The technology that you all are developing can help transform that and make sure that our ability to transact quickly, efficiently, safely is also much cheaper than we're finding today. So some of what's called the friction in the banking industry can be removed because of this extraordinary technology. In order for people like me who are making policy about technology that we don't even fully understand, we need to sit down with people like you. So that's why Senator Gillibrand and I go to these different events. We send staffers to these events, and we invite people into our offices to help explain this to us. So it's a continuing dialogue. We'll never have the opportunity to all sit at the same table at the same time. There's too many of you and too few of us. But Kyle, events like this really help.
Thank you. Thank you. And you talking so openly on the other side helps a lot. There's so much innovation, things move so quickly in this industry that we are very appreciative of individuals like you that make yourself available and help to push this industry forward. And Senator Lummis, my last question before you have to go and be in session here in just a few minutes is, as we do head into 23, what are you excited about, or what are you seeing as some additional trends for the Web3 industry that those in the audience can continue to be excited about? You mentioned central bank digital currencies, the unbanked, and a few others, but what parting words of wisdom can you leave us all with today that we can go out and build and look forward to in 23?
Well, the FTX bankruptcy and the contagion that has followed it, I was concerned might cause Congress to have a knee-jerk reaction and say, we need to ban this stuff. And so I've been pleasantly surprised that the opposite has happened. We have this Financial Innovation Caucus here in the Senate that Senator Kirsten Sinema and I co-sponsor, and we had an event yesterday here on Capitol Hill with a speaker who was talking about how did this happen, what's going on with the bankruptcy, and it was standing room only at this event, and which is to say that members of the Senate are sending their staffers to learn more about this because they want to do it right. They recognize that we need to have regulation, but we don't want to over-regulate and stifle an industry that is so important to our future. You look at where the internet was in about the year 2000. That may be where Web3 is in the year 2022. So we made some mistakes regulatorily with the internet in 2000, and I think most senators are kind of aware that, okay, we're at the same crossroads now with Web3 that we were 22 years ago with the internet. Let's get this one right. Let's be thoughtful. Let's not do knee-jerk reactions to things we don't quite understand. Let's work with innovative people to find the right balance. And I see that happening. So I'm telling you, I'm encouraged rather than discouraged about the way things are shaping up here in Congress with regard to the fallout from the bankruptcies we're seeing. And I want you to be encouraged too. I want you to continue to help us to make sure that we do allow innovation. I sat down with an innovator at one of these sessions, and we were drawing little pictures of how the technology he's working on works. I was drawing little boxes about how the regulatory framework that I envision might work. So we're like two kids in a back room making huge decisions. His huge decision was about the technology. My huge decision is about regulation. And here we're sharing in the simplest of terms on pencil and paper how that can occur. Those conversations are now happening in the Senate. And I think that's true in the House as well. So keep us involved. No, we're not going dark on you in terms of forestalling regulation. We're leaning into it. We're going, good things are going to come out of it. That's the message I want to share.
Wonderful. Well, Senator Lummis, thank you so very much for all of that, for taking time out of your day. As again, I know you are in session. We do very much appreciate you joining us today. Ladies and gentlemen, Senator Lummis.
Thanks, Kyle. Thank you all.